Hey, this is Chris from StockSpot. Now, a question we get a lot from FIRE investors is why should I own defensive assets at all? You know, we know over the long run, historically, defensive assets like bonds and gold have had lower returns in the share market. So why wouldn't I just put all of my money into shares, given that I'm investing for a really long time horizon, 20, 30, 40 years? And it's a great question because theoretically, if you had only invested into shares over the last 20 years, you would have done better than investing that money across different asset classes. Now, in this video, I'm going to share 3 reasons why I still think investors that are investing to retire early and develop a large long-term income stream should still be investing into some defensive assets, irrespective of this. And the first reason is behavioral. So we know that even though people have the best intentions, and a lot of FIRE investors are very sensible thinkers, they're engineers or other people from industries where they really have to think very logically, we know that even if you know about your own behavioral biases, loss aversion and things like this, when you actually come to face them, it's still very difficult. And 2020 was a great example. The share market fell at the start of the year by something like 35%. So if you were just invested into shares, 35% of your money would have been wiped. Now, some people were able to stay disciplined and stay invested, but unfortunately, a lot of people made the wrong move and sold out or moved money into cash or parked it on the sidelines in times like that. Now, where I see a big benefit is if some of that money had been invested into bonds or gold, which we do for all of the StockSpot portfolios, that would have really cushioned the blow of your portfolio and given you a lot more confidence to stay invested. So even in our most risky portfolio, the losses were less than half of the share market. So you really don't have to withstand as much of the downside. Plus, you had the added benefit of automated rebalancing, where we would be selling some of those defensive assets and putting them into the growth assets at that time. So you feel the positivity of actually making the right move and having extra money to be investing into growth assets at that point, which then can help to boost your returns. Which takes me to the second point, which is actually that historically having a small amount invested into defensive assets and used to rebalance into growth assets didn't really take a lot from your performance. Now, granted, bonds as an asset class have had a fabulous last 20 or 30 years, which has meant that their returns are not too dissimilar from shares. But even so, you'd be surprised how little you give up on returns by having a little bit of defensiveness in your portfolio, but how much you gain in reducing the amount of volatility that you can withstand. And this is all about improving the quality of your returns. You don't actually need to add a lot of gold or bonds into your portfolio to really jack up the quality of those returns and the smoothness of your returns over time. And the third and final reason why I'd say at least a small amount of bonds and gold in your portfolio makes sense is an insurance policy. So while over most periods of time the share market performs well, there are periods in history where certain share markets in the world have had an awful return for many decades in a row, with the most popular and common example being Japan. So after their market hit their highs in the very late 80s, early 90s, they didn't see those highs again for over 30 years. Now, the couple of asset classes that did perform very well over those 30 years were asset classes like bonds, Japanese government bonds, and gold denominated in yen. So if we do enter at some point in your life, and it's possible you will at some point in your life, a period where shares don't do well for an extended period of time, having some defensive assets is going to give you a better chance of being able to retire early, rather than having to wait 30 years for shares to recover again. And that's why I think everyone, even people invested for very long periods of time, should have some defensive assets.